Welcome to the Capital News. I am your host, Alex Karitis. Today is Thursday, April 16th, 2020. Thank you so much for joining me. The title of today's podcast is Jobs Down, Stocks Up. Would we expect it any other way in the Twilight Zone? Financial stock market world of Oz. I'm going to keep this podcast tonight a little bit shorter than usual. It's pretty much the same song and dance, but because there were some key data points that were out, I wanted to make sure that I did do a podcast this evening. We could all use a break from reality, so thank goodness it's the weekend coming up. A little bit of perspective here for us. This is total U.S. jobs. This is going back a little bit, okay? So we have June of 2009, all right? Total U.S. jobs, 131 million. The end of June was selected because that was the end, quote unquote, of the Great Financial Crisis, the GFC. February 20th of this year, 152.5 million jobs. 152.5 million jobs. That's an increase of approximately 21.8 million. Okay, so the entire expansion following the Great Financial Crisis, which is the longest in U.S. recorded history, but it is also the weakest, 21.8 million jobs were created. Recent initial jobless claims, March 20th of this year, 3.3 million. March 27th, 6.6 million. April 3rd, 6.6 million. April 10th, 5.2 million. That's the number that came out today. There's a lag in the data once it gets released. Next Thursday, we'll get what took place this week. We imagine, obviously, that it is going to slow down. The rate of increase is going to slow down. We're going to have a plateauing effect. And, of course, you have to take into consideration also the fact that you have those small business loans, which, of course, have already dried up to about $350 billion. And one of the contingencies, some of the strings attached, is that employers, small businesses, have to keep their employees on payroll. They might not be working, but they're going to get a paycheck. Basically the same thing if you were on unemployment. Except in this case, at least one of the perks would be individuals could hopefully keep their benefits as well. So of this, the recent claims over the past 4 weeks total 21.8. Now, the decimal goes out a few points, but the fact of the matter is, on a net basis, all the jobs since the end of the Great Financial Crisis in June of 2009 have been erased. Allow me to repeat this. All the jobs since the end of the Great Financial Crisis in June of 2009 have been erased. 10 years worth of jobs gains have been erased in the past 4 weeks. And we're not done. We are not done. We haven't seen bankruptcies. We haven't seen defaults, major bankruptcy. I mean, there have been a couple, obviously. Businesses go out of business all the time, regardless of whether there's a pandemic or any type of financial crisis. It's the ebbs and flows of the business. It's how it works. But we haven't seen any majors go down yet. Haven't seen any major defaults yet. They're coming. I know and understand that the federal government, which doesn't have any money, of course, is trying like hell to make sure it doesn't happen in conjunction with the Federal Reserve. How many holes in the ship are they going to try to fill? Titanic's already hit the iceberg. It's going down. We know this. But that's just some perspective. And, of course, we talked about this the other day as well because there was that report from Deutsche Bank who was predicting that this week was going to be actually a little bit worse than what was predicted with the 5.2 million that came out, because they were anticipating that over the past 4 weeks it was going to be about 25 million jobs that were lost over the past 4 weeks. Now, of course, that could still take place. Let's hope it doesn't, but it's likely going to get very close to that number. Regardless of their forecast from Deutsche Bank, the net result still remains true. The last 4 weeks have wiped out 10 years worth of jobs gains. And again, you have to look at this and understand this is a signal, this is a sign that tells us the past decade has been a bubble. This audience knows this. It's been a fake, it's been a phony, it's been a facade. This is the era of too big to fail. Now it's almost becoming the era of too big to bail out. Because today is Thursday. The Federal Reserve is supposed to update their balance sheet. It was just on their website. Hasn't been updated. So it still remains just a little bit north of $6 trillion. I don't know what the delay is. Maybe they changed the name of the data point that I am unaware of. I'll check this again tomorrow, but it still remains just a little bit north of $6 trillion. And again, that graph is vertical, and we showed this in a recent video presentation on thecapitalnews.com and our YouTube channel at The Capital News. The Fed is buying everything. Just so you can get a visual and understanding of the Federal Reserve's balance sheet. We know what they're buying. They're buying junk. As we discussed here yesterday, they are pretty much the only buyer. The vast majority of Uncle Sam's debt is going to be purchased by the Federal Reserve through the secondary market, of course, primer dealers, and then the Federal Reserve will gobble it up. Nobody else has the money. Nobody else wants it. Basically rendering US Treasury's junk. But not quite yet. Not quite yet, because the Federal Reserve is still doing a decent job, you could say, of keeping rates low. How long is this going to last? Time will tell, but we will keep you posted on what takes place there. So despite the fact that we have 21 million unemployed over the past 4 weeks, and this, of course, doesn't include the Americans, the many Americans who were unemployed before all of this took place. The markets, nevertheless, they closed up today. They closed up. It was a choppy session, but nevertheless, up is up. And if you look at the futures market right now, we have the Dow Jones Industrial Average and the S&P 500 up over 3%. And we have the NASDAQ 100 futures market up 2.33%. This is on the back of a headline, a news release from Gilead or Gilead. I can't remember the pronunciation right now off the top of my head. A pharmaceutical company that could perhaps be making headway with a vaccine. Of course, they're just running off of the headline. If you actually read the press or the whole thing in its entirety, it's just saying, there's some promising data, but it's still way too early to tell. Wall Street doesn't care. It just wants any type of positive news so it can justify continuing its march higher, despite the fact that we are entering a recession, already in one, and most likely entering a Great Depression. Now, it's also interesting to note, way behind the curve is the International Monetary Fund, which is no surprise, and way ahead of the curve is us, again, here at the Capital News. But even the IMF is now starting to say there is going to be social unrest. There is going to be social unrest globally. Well, what do you think is going to happen? We're already starting to see some of the cracks here in the United States. In several states, people are marching on their state's capital, demanding that the economy be quote-unquote reopened. This is just the tip of the iceberg, ladies and gentlemen. I told you months ago that this was going to be coming to a theater near you well before COVID-19. Well before COVID-19, because we knew what was going to take place. The writing was on the wall. It's been on the wall. This economy has been a joke for a decade plus. It's been a joke on steroids over the past few years. The tax cuts, which were completely unneeded, basically going to corporate America. Their tax revenue is already extremely low as it is, as far as, obviously, taxation to the government, in a time which you're at the end of a record expansion. It's just the wrong time to do it. And I'm somebody who wants the abolishment of taxes, okay? But you have to understand, you have to have a process in place. You have to have a plan. You want to cut taxes, phenomenal, but you have to cut spending along with it. We didn't. In fact, we picked up spending. $1 trillion deficits. Now we're about to hit $4 trillion this year if a government watchdog agency is correct in their projections. And I presume they're going to be pretty damn close. And again, this is just the tip of the iceberg. All of this money, all of this quote-unquote stimulus, these spending bills, money to people, unemployment, small business loans, Trillions to Wall Street and corporate America, one bailout after the next. Uncle Sam's is broke as a joke. He doesn't have it. This is money printing. Your $1,200, if you've been lucky enough, I guess you could say, to get it, because most people need it, is sit down and shut up money. That's all it is. And now they're talking about $2,000 a month until this whole thing is done. Well, I thought we were opening up the economy May 1st. Isn't that the date now? What's going to happen? I mean, if President was out there in one of his pressers, like I said, I can barely watch these things anymore. But, outlining how the economy is going to be opened up, leaving it to the states and to the governors because he has to, because he's not a king. It's not how it works. So finally, he understands that, at least to some degree. He might not like it, but that's the reality of this thing. It is called the Constitution. As inconvenient as it may be for him and other politicians who've already trampled the thing to death. But regardless, it still has some threads alive, thank goodness, leaving it up to the states to decide when and how to open up, and then giving some guidelines as to how they may go about it. Okay. The economy, of course, does need to open up. There's no ifs, ands, or buts about it. Unfortunately, it's going to be completely different. The behavioral changes are going to take place. Despite the fact that the government is giving a whole bunch of people money, a lot of people more money to not work. So I don't get how this is going to play out. What do you think? People who have a job that they don't like, you think they're going to be in any hurry to go back to do that job? At the same time, when a lot of those types of positions with a lot of small businesses are gone. Okay, so what does this mean now when you have an abundance of labor? That's your supply. The wages go down. Well, that ain't going to be good, is it? Especially not in an election year, is it? So maybe there's been a little bit of cynical Machiavellian play behind all of this, just perhaps, huh? Or maybe it's something even more sinister. I don't know. Maybe they know what we know here at the Capital News, that we're in a great recession, headed for a great depression. Again, I hope that's not the case, but the writing's on the wall as far as we're concerned. You cannot have a joke of an economy for a decade, really much longer than that. But to the degree in which it has been, with all of this free, quote-unquote, free money, credit for everybody, and then think that, well, we're going to hit this rough patch and it's going to be over in a few weeks. That's what the idiots and the crackheads on Wall Street seem to think, because the stock market just continues to rally and rally and rally. So apparently bad news isn't good news. It's great news. It's fantastic news. The worse the numbers, the better the stock market seems to want to perform. It's complete perversion. It's disgusting, as far as I'm concerned. Some more market news. We have the Japanese markets up 2.5%, undoubtedly on the back of the news of a potential vaccine, which, of course, is a bunch of hogwash. It's preliminary. I hope the vaccine comes through, but it's, again, read the press statement. Europe was a mixed bag today. The Australian markets at the time of this podcast are up 1.6%. Headlines out of China. China posts the first GDP contraction on record. The Chinese economy shrank 6.8% year over year in the first quarter of 2020, after a 6% growth rate in the fourth quarter of 2019, and compared with a market consensus of a 6.5% decline, so slightly worse than anticipated. This was the first contraction since the report began in 1992. Okay, so the Chinese economy shrank by 6.8% year over year in the first quarter of 2020. Now, of course, we have to take that number with a grain of salt, but it is in the right direction, so we'll give them credit for that. I mean, pretty much even the fraudsters over in China couldn't make something up that was completely out of the realm of possibility. So there you have it, contraction of 6.8%. You also have Chinese retail sales dropping more than expected. Chinese retail trade declined by 15.8% year on year in the month of March, following a 20.5% slump in the January to February reading. So there you have it, folks. On the commodity front, still not enough from OPEC+. WTI is trading at $19.71. Brent is at $28.29 per barrel. Natural gas did rally a little bit today, trading at $1.70 per million British thermal units. Gold and silver, relatively flat, but down at the time of this podcast slightly. Gold is at $1,705 an ounce. Silver is at $15.32. On the bond front, Uncle Sam's U.S. 10-year Treasury note, relatively unchanged from yesterday, yielding 0.67%. So that's pretty much what I wanted to cover here this evening, ladies and gentlemen. Jobs down, stocks up. I mean, are we long in the tooth in this rally, or are we just getting started? $6 trillion balance sheet is a lot of cash. It's a lot of liquidity. And when you have BlackRock, the fox in the henhouse, dictating where this money goes, anything could happen. Anything could happen. Nobody's questioning anything. The inspector general that was supposed to oversee all of this has been fired. It really made no difference anyway because the president wasn't going to comply with any type of oversight. Talk about the most transparent administration ever, as the president likes to say. We now have a new press secretary, which is somewhat old news, but nevertheless, Stephanie Grisham is gone. We have to thank her for her countless number of press briefings she gave to the American people. Oh, that's right, she didn't give any. Goose egg, big fat zero. But she's got the boot regardless. So there you have it, folks. Nothing but transparency. Of course, that's sarcasm. No oversight. A Congress that remains on vacation. Small business loans that are now dried up, already out of the $350 billion that has been allocated. Nevertheless, multiples of order of magnitude, trillions of dollars, without hesitation, without a blink of an eye, have gone to bail out hedge funds, private equity, Wall Street, and major corporations. You better wake up, people. I don't know what else to tell you. Although, let's be thankful that tomorrow is Friday. What a crazy week this has been. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.